Good afternoon. Here are the closing market comments for Monday, November 22nd. The corn market was a little bit easier today following through on yesterday's disappointing performance. The charts aren't looking real good, and overall just a lack of bullish news in the corn market. But soybeans was a different story today, rallying 18 to 20 cents, mostly on South American weather changes in the forecast. Last week, all week long, they were talking about some pretty decent rains coming over the next couple of weeks for both Argentina and southern Brazil. Coming in this morning, the rains over the weekend were very disappointing in Argentina, and the forecast looking forward is much drier as well. So a much more friendly weather outlook in southern Brazil and Argentina, pumping up soybean prices today. December corn finished 5.5 cents lower at $5.15 1/4. July's corn down a nickel at $5.40 3/4. January soybeans up 20 cents at $12.21 1/2, and July soybeans up 18 3/4 at $12.30 3/4. Kansas City December wheat up 3 cents at $7.12 1/2, and Minneapolis December wheat up 4 1/4, finishing at $7.30. Outside markets were relatively quiet today, somewhat choppy and mixed. Crude oil currently down 32 cents a barrel at $81.66. The gold market up $10 an ounce at $1,362. The U.S. dollar index up 19 points at 78.79, and the stock market seeing some moderate losses with the Dow 46 points lower, trading at 11,156. Livestock markets were mixed, with December cattle falling 52 cents to close at 192 cents, while the December hogs were up 27 cents, finishing at 69.40. We had a weekly export inspection report that came out this morning. Corn inspections last week, 24.4 million bushels. Disappointing, it came in below the range of estimates that were from 25 to 33 million bushels. The sales on the books for corn are still relatively large, but the shipments continue to be quite slow. 38 million bushels are needed on a weekly average to reach USDA's current forecast, so we can see today's number, 13 to 14 million bushels below what's needed. In soybeans, 42.8 million bushels inspected last week. That was below the range of estimates that was from 50 to 60 million bushels. Last week's inspection number was increased by 11.8 million bushels to 67.3. 26.5 million bushels are needed on a weekly average to reach USDA's forecast. In wheat, 13.8 million bushels were inspected last week. That was below the range of estimates that were from 15 to 24 million bushels. Shipments at this time only 1/2 of the needed level to reach USDA, so quite disappointing for the wheat. In grain news, the funds have been huge sellers recently. In Friday's Commitment of Traders report, the commodity funds reported selling 95,000 contracts of corn, beans, and wheat combined. That was the largest amount of sales by the funds since January early this year, and the second largest amount of sales for any given week in over a year. Outside markets were mixed today, providing mostly a light negative influence on the grains, with the dollar a little higher and crude oil a little bit lower. U.S. corn and soybeans are both very competitive on the world market, so the recent price break should help solidify some export demand. The forecast for Argentina and far southern Brazil has again turned drier. Rains over the weekend were disappointing, and only scattered rains of 1/10 to 1/2 inch are expected this coming weekend. If the pattern doesn't change soon, the talk in the marketplace will go from a drier than normal weather pattern to the potential for actual crop stress. With Brazil likely pushing towards 70% planted and Argentina approaching 50%, I thought now would be a good time to take a look at the maps that show where the soybeans are produced in both Brazil and Argentina. This way, as the marketplace begins to talk more and more about weather and about areas that may be potentially getting dry, we have a feel if it's hitting the heart of their grain-producing regions or not. Taking a look at the soybean production area in Brazil, we can see that Mato Grosso, the area of the center west, which has really expanded over the last 6 to 8 years, is the #1 producer. Now, this is information coming off of USDA. It isn't current. It's from 2000-2002. So the Mato Grosso area has expanded even more since then. But again, it is now the #1 soybean producing state in Brazil. Another area of heavy production, Paraná and Rio Grande do Sul, combined pushing towards 40% of the nation's production. And again, that's the important producing area in the far southern areas of Brazil. This southern production region of Brazil is going to be an area to watch. with a strong La Nina in place in the Pacific Ocean. Typically, it's the far southern portions of Brazil and Argentina that are the most affected. Taking a look at the Argentine soybean producing areas, we can see that the central areas of Cordoba, Santa Fe, and Entre Rios are the heavy producing areas in Argentina. To give us a little bit of a reference point, we talk about the La Nina taking place in far southern Brazil and Argentina. Rio Grande do Sul in extreme southern Brazil would be where my red X is, and the closest in proximity to the Argentine production areas. Taking a look at today's December corn chart, corn is again challenging right on the upward trending line. We tested it down at 509 last week on Wednesday, and we tested it down around 512 in today's trade. Some people watching the charts are watching these lows, especially the 509 low from last Wednesday, with thoughts that if we break 509, this market could make an attempt to challenge the 454 lows that were posted back in early October. But at this time, with a major fundamental change that's taken place in the balance sheet since October, I think the odds of us breaking through that line and challenging those lows are quite low. If this corn market does in fact find support in this 509, 512 type trading range, then I think there's a decent chance that this market can gradually work higher along our trading range as we move further into the winter. Given the fact that the supply and demand picture is extremely tight and the recent break of over 90 cents in the corn market actually should support the overall demand for corn, and therefore I'm looking for this market to work higher over time in the general direction of the long-term trend, and that we could approach that $6 level again over time. Whether we hit it in December or maybe closer to the January crop report will be largely dependent upon what type of news we get. If South America does in fact have additional weather problems, we could reach that $6 target relatively quickly, whereas if we just continue to work along the trend line with no major bullish stories, we may approach that level maybe closer to the January-February timeframe. Turning to our January soybean chart, soybeans seem to be consolidating and finding support down at the lower end of its recent trading range. Today's close at 12.21 is a full 46 cents above the lows posted last week at 11.75. At this point, soybeans have major support in the 11.50 to 11.75 range, and it appears, at least at this time, that that level has held. If the South American weather does not improve and we remain drier than normal across southern Brazil and Argentina, then the overall uptrend is likely to continue, and these prices could work higher into the heart of the South American growing season, which is December and January. Today's forecast for southern Brazil and Argentina is much more concerning than we saw last week, and therefore I am expecting for this market to work higher, very likely towards the $13 level sometime during the month of December. If there would be any kind of heat show up to join forces with the overall drier than normal conditions, then the soybeans could potentially become explosive due to the fact that the U.S. stocks-to-use ratio is extremely tight. Turning to the Kansas City December wheat chart, wheat has found some pretty good support down around that 680 to 685 level. That was the lows that were posted in October as well, and the lows last Wednesday at 684, at least at this point, have held quite well. Wheat does have major overhead resistance in the 735 to 750 range where all of our moving averages are coming through. And so that would be the next target for traders, is to look for this market to try and challenge some of those overhead resistance levels. Since my overall thought process is that corn is likely to work higher over time, soybeans also, I believe, very likely to test that 735 to 750 level. And if corn does, in fact, work back into the $6 trading range in the December-January timeframe, I think wheat is likely to challenge its $8 price range in that same type of time frame. So let's keep an eye on the corn and the overall bull trend there, and use that as our indication as to whether wheat can actually approach that $8 level as we get further into the winter.